Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday, August 17th. Kicking off a little later than I planned. Technical issues got the better of me, so I appreciate you hanging with me there. Not a tremendously eventful day in the market, but certain areas definitely we're moving. Before we get into what's on the docket, what things did here today, let's just take a quick peek at our upcoming earnings for next week here. S&P, we got a lot of retail companies, not the hugest of the huge names, but pretty big names, Lowe's, TJX companies. We have Target, Ross, Dollar Tree, Kohl's, The Gap, Foot Locker, Urban Outfitters. So really quite a bit of retail earnings coming up. That's kind of really what's on the docket here going into next week. So we've seen a little bit of mix, but we saw, Walmart come out with such a fantastic report. It's going to be hard to match that. But retail has been overall doing very well. Let's kind of see if the momentum continue after we get past these earnings here next week. Coming in to the overall market, like I said, not a tremendously eventful day, a very status quo type of day for the most part. Here we have the NASDAQ, basically same general place as it was yesterday, kind of trading between its 50-day moving average and, of course, that overhead resistance that it's been struggling with. We'll just kind of want to watch how it develops here next week. Like I said, we really, until we come out of this, we really don't have much interesting to say about it, right? So we can be prepared, but unless we have a huge movement or something, until we come out of this pattern, it's kind of just doing the same thing over and over again. And that's okay. We'll be ready when it eventually does decide what it wants to do. S&P inching closer to its resistance level as well. Certainly more buyers in control today, not quite as maybe with as much gusto as yesterday, but certainly they were in the house today. We're getting close. Again, always got to be prepared, but always love when our broad markets are threatening to break out. That means we have breakout candidates to potentially trade. So we'll kind of have to watch what happens if and when we get there. Our Dow was able to get to its little resistance that it's been using, and I think you could argue close above it. I would err on the side of caution and say we closed at resistance, but it was pretty darn close. A lot of strength kind of continuing off of yesterday's strong movement in the Dow Jones. But we're definitely challenging that high. Great thing about a chart that looks like this is we don't really have much. If we can clear this resistance, smooth sailing until we get to the top over here, right? So no technical reason why if we do break out, we can't continue to run for a little bit further until we get to that next challenge. Of course, the Russell to close out our indexes, still in that same range. Again, much like the NASDAQ, it's going to have to figure it out before we can figure it out. Definitely been a good couple of weeks, or a good 6 weeks or so for our neutral traders, our iron condor traders out there. So I'm sure not everybody is unhappy to see the Russell going into that sideways pattern. Shifting gears into our sectors, XLB kind of ran up, and it really struggled throughout a large part of the day at the bottom of that trend line before ultimately breaking through. I'm not convinced that that we're back into that range, but I need one more day. If we falter on Monday, I'll kind of think that this pattern holds, and that's going to be acting as resistance. At least that'll be my first sign. If we push up again back into that range, I'll probably be looking at this as a failed break of that range and kind of be looking back into it. So for me, at least, I need one more day. It can do whatever it wants to do unless that's nothing, to give me a little bit of a signal. So we'll talk about that, of course, here on Monday. Looking at our energy sector, again, just kind of hung around its 200-day moving average. Not a lot of buyers coming in, but the bleeding has stopped, at least for the time being. So as we go into next week, if you love energy stocks, can't be unhappy about that 200 putting up that fight for you. If you're like me and you're just saying this is kind of a choppy mess right now, I'll just wish anybody who plays it, whatever they decide to do, good luck until I feel like I have a better handle on it. It's just a little too choppy. And like I said, many times before. When we have things that are behaving nicely, we don't need to push it, right? And you might have a great read on oil, and that just might be a me thing. That stuff happens for sure. But that's where we find ourselves. Another pretty solid day in the financials, eking closer and closer to that resistance level once again. So it's another good day over there. Same with our industrials. They had another very solid day in the market. We're going to get another test of resistance, it looks like. And there's been a lot of strength this week in the industrial sector after kind of some real back and forth stuff. If we can break through that, probably going to be a pretty bullish signal. I'm not going to hold my breath. It's going to have to prove to me that it's going to do that, but I'd have to agree that that would be a bullish signal if and when that does happen. So we've got a lot of things going to be testing resistance potentially next week. So be on the lookout for potential breakout candidates. Be on the lookout for potential bearish retracements if you're on that side of the thing. So opportunities present themselves when we get to resistance and support, right? Taking a look at the tech sector, again, NASDAQ tech sector, basically one and the same, right? Hanging around. We need a little more clarity. If you're a bull, you probably are still a bull. Everything is still good technically. If you're cautious, you probably want to see it break out, just like you want to see the NASDAQ break out. So really nothing too exciting to say over there. Our staples definitely finished the week strong. Those pullbacks that happened early this week certainly paid off in the real estate and the staple sector. A lot of things, of course, went up. It was a good overall week in the market for a lot of things, but we definitely saw some movement. As we talked about last week, last week, our resistance level is our next kind of real level of resistance is somewhere in the general ballpark of 56. We may not get there all in one fell swoop, although with the momentum behind it, I'm not going to bet against it. So we remain very strong overall in that sector. Absolutely. Utilities was able to carry on its break and kind of break through that second level of resistance and close above that here today. So this really funny. They've been sideways forever. I don't regret it because I wasn't comfortable with it, but I would be, lying if I said I wish I didn't trade that breakout in the utility sector. It was certainly very, very strong, a lot of strength going on. Again, we're kind of layered with different levels of resistance that we'll just want to be keeping an eye on, right? So we can always be prepared, whether that's scale out, just stop losses, sell calls against our positions, close out, whatever that might mean. Just always a good idea to understand where it might struggle, and at least to mentally prepare yourself, at least if you're me. So really strong close of the week there in the utility sector. We're getting pretty darn close to our high point on our healthcare sector. It's just shy of 92. We're at 9109 today. We're getting close to testing that out. So that will definitely be something we'll want to be keeping an eye on, I think, next week, because, based on this momentum, I'm pretty sure it's going to test it based off of how it's been performing, but very strong sector. We'll want to keep an eye on that resistance level because, of course, that was the high point, right? The only thing we know for certainty is it really was really on fire last time it got to that price, and that didn't stop it from really tanking, right? So I'm not saying that's going to happen again, and that's not what my expectation is, but it happened before. I better at least recognize that that is a potential issue for us there. Still fighting with resistance in our discretionary sector, so nothing really changed from that point of view. Much like the NASDAQ chart, we're kind of propped up by the 50, bumping our head at resistance. So definitely would like to see a break or one way or the other to get a little bit of clarity over there. And of course, to close us out, our real estate, who just, they were doing great this morning, but then they just kind of kicked it to another gear and actually closed at that resistance level that we looked at here over the course of the week. Closed very strong, closed kind of right at that resistance level. Wouldn't be surprised, again, you guys know me, I'm never surprised if resistance puts up a fight. That's always what my expectation is. And if I'm a bull, I just hope that I'm wrong, right? So, and if I'm looking at a chart that looks like this, I'm probably a bull, I would imagine, because, the trend is your friend, as they say. There's a reason that they say that. So very strong overall movement, again, here in the real estate this week. Just keep an eye on that resistance. If you missed out on that opportunity, maybe we can get a bit of a pullback. Maybe we consolidate and break. Again, we don't control what happens, but we can always kind of visualize, if you will, what we'd like. If I'm not here, hey, maybe we could pull back into 33.50 and I could get a pullback opportunity. There's nothing wrong with asking for it, right? I'm not entitled to get it, and I very well may not, but we can kind of do some preparing there. So again, really strong week overall in our market. Certainly some areas better than others, but certainly a bullish paradise for the most part this week. In our metals, definitely some interesting things are developing. We did see some buyers come back in. It looks like potentially, at least, we might be setting up some bearish retracements going into next week. As we talked before, a couple of things that we can watch for. We can watch for that little kind of mini 2-day mini floor that they broke through, midweek. We can, of course, watch that old floor that they danced around for several weeks, both as potential turnaround points. If we are looking for a bearish retracement, we can kind of watch it if we run into some of the shorter term moving averages, the averages that you see here on my chart. The red is the 20-day simple moving average, and the pink is the 9 exponential moving average. So we can kind of look at it as it runs into those areas. If we are looking for some potential retracements, if we're looking to buy, well, I don't have a lot of insight because I wouldn't buy any trend that looked like this, no matter what it was for. And so it's going to have to do things to make me feel like, yeah, okay, that's something I can identify. I'm not going to pick the bottom because odds are I'm not going to pick right. That's for sure. Very similar situation over in silver. So we definitely, who knows what will come of it, but it looks like we're going to get an opportunity for some bearish retracements over in the metals as we work into next week. Continue to pull back in our dollar index today. So if you're kind of missing out on that breakout and wanted to take part in some of the strength of the dollar, seeing a pullback is never a bad thing, right? We're definitely happy to see that if we're not around. That's for sure. But overall, still remain pretty much the same as we've been since we broke out. The breakout remains intact. Pullback was, of course, inevitable, right? Where we don't know, but eventually it was going to happen. So we can kind of watch that going into next week, see what happens if we build a higher level of support, get through a candle, if we pull back to the breakout point. I don't necessarily think it's going to go that far, but my opinion, just that, right? It very well might go that far. So something to keep an eye on there. We did bounce off of that little support level on natural gas. So that market does remain pretty bullish. We still have that same overhead, kind of little mini sideways type of a situation going on, which is, of course, bird's eye view it a little bit, kind of see how that's been playing out on our hourly chart. You can see we're really, really sideways. So, a couple things that you could be looking for in a chart that looks like this, not necessarily natural gas in this particular instance, but if this is something I want to get into potentially, well, hey, maybe I came in at support, but I probably didn't. That happened pretty quickly. I can kind of scrunch down that time frame, look at a shorter term time frame, identify a potential break, and play it. Now, that's something I probably am not going to be too keen on. I've got, I just don't like all that stuff at around $3. That's not a ton of room there. So that's probably not up my alley this time, but that is certainly a technique we can use with this type of situation. That's for sure. And of course, on crude, we continue it's choppy, and there's just layers everywhere. There's always another level of support or another level of resistance. We clearly are in that downward swing in the shorter intermediate term by making lower highs and lower lows. That's really not up for debate. But there's all sorts of different levels of support and resistance above us and below us. And until this is just me, of course, but I need that to simmer down. I don't really feel like I have a very good handle on that right now. I can understand really both sides of it, bulls and bears. And if that's the case, I don't think a great trade's in there, at least in my opinion. So, but certainly, we are seeing, a little bit of movement come back into it following that big sell-off there on Wednesday. I remember the day. Of course, it's Wednesday. But we did see a little bit of upward movement in there. So if you are bullish, that certainly has to be a little bit of a satisfying feeling. That's for sure. But lots of stuff on top of this: challenges, previous support, moving averages, previous highs. Get through one, and others right around there. And I don't ever really like charts that don't have space. I like big empty spaces. You break one, there's nothing for a little while. That's my general philosophy. So that's where we find ourselves to close this week out, ladies and gentlemen. Definitely an interesting week in the market. Like I said, a lot of retail earnings next week, so we'll keep an eye on how that kind of plays out as we go forward. Of course, have a wonderful weekend. If you haven't already, go ahead and be sure to subscribe to the Tackle Trading YouTube channel and hit the notification bell so you can be alerted anytime we have a new video or live stream going on. We always love to share those things with you. If you enjoyed the market recap, it's always helpful and appreciated if you give it a thumbs up, just to let us know we're on the right track. If you're not a pro member over at Tackle Trading, why don't you get over there and give us a try and use the 15-day free trial. You can check out our scattering reports this weekend, our shows next week, our coaches lounge, all sorts of good stuff. Come check us out. We'd love to have you. So we will hope to see you there. With that, ladies and gentlemen, as always, it is my pleasure. Thank you so much, and I will see you in the next one.